Well, good weekend, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up's your weekend edition for Friday, the 24th of November, 2023. Well, we're still rallying in the stock indices. Pretty powerful stuff, all right? There is a point to come out. On a seasonal basis, I talk about it in my morning subscriber videos. I'm not about to give that here. It's that simple. Not going to do it. It's been a heck of a trade, too. And by the way, the rally hasn't been limited to just the United States markets. A lot of the developed country markets have moved. Why? Because so many central banks have moved into the pause mode. That doesn't mean they're cutting next. And I know people they're already betting, oh, how many severe cuts? When's the first cut coming? You're not at that point, folks, all right? You're at the point where the pause is here. And yes, you're right to think that they will come down in rates if inflation falls. I used the key word, if. You're getting help from energy markets, which are under a lot of pressure, because OPEC is in the midst of a huge battle internally where Saudi Arabia is saying, guys, it's not just me. Everybody's got to come to the table. Russia, stop cheating. All you do is you say you're going to do this and you do something else. You get in compliance for 2 weeks and then you're out of it. I'm making this up, but that I'm sure behind the wall is being said because it's what's going on. Then they've got to be looking, where can I get more cuts? Because Venezuelan oil is coming slowly back on the market, and you're back in production in big numbers in Iranian oil. So where's the production going to come? Well, you're not getting it from the United States. We're hitting records. So where do you go? Well, you got to go to your other OPEC members. And if they don't want to do it, the hard decision is, do the Saudis carry the day and even cut more by themselves to do this? Or do they tell some of the members, hey, you've got to cut. It's your turn. 2 of them on the line seem to be Angola and Nigeria. Now, before we go into the charts, I want to talk to you about my Black Friday Cyber Week special. I'm giving away any course that I have free with a 1-year subscription. I'll get into that in a moment, a 1-year subscription to my research, the original charting course. I ask you, if you choose this one, wait. Late January at the latest, I should have the new course done. I gave you the latest. I'm trying to have it for Christmas. So, and it'll be brand new. I think you'll love it, all right? I'm far away into the course. I'll be working on it literally all day tomorrow. So I'll get a lot of chapters done again tomorrow. And then this is still November. I'm shooting that I want it done before Christmas. That gives me 3-4 weeks. I think I'll make it. The Enhanced Bollinger Band course, my absolute favorite course. The Outside Day course, so important. Continuation patterns or not. Now, how do you get it? All right. So let's talk for just a minute, if we could, as to how this whole thing works. And behind me, I'll just have what it's telling you. If you're an existing subscriber and you're at, let's assume, either a ETF course or a morning subscriber, if you move up to a combo, terrific. I'll throw it in. But if you move from the morning futures to a morning ETF, I'm not going to do that. It's basically a wash. The courses are about, the subscription for a year runs about the same. If you come in fresh for my full research there, I promise you, these courses in most cases are more money than the research is costing. All right? So you're getting a deal. You get the charting software to go with it. You get the instruction. But here's what it's about. It's about education. Number 2, who says that it has to be your course? You can buy the subscription for yourself if you've already gotten my course and give a course away as a gift. It's a lot better than a sweater, a pair of socks that are going to sit there, or whatever that's going to be lost. This sticks with people. So this is something good, and we'll work with you on that, help you get it all set up. So again, how do you do this? You can call my staff if you have a question. There'll be a cursor up here if you want to move it there. Or if you're watching me on YouTube, I think it's the top right, you're going to see the link. Click the link, go in there. This ends very quickly, so take advantage. Okay, now let's go back to where we were. So let's take a look, if we could, at the markets. On the S&P, you're in an uptrend and you're back up into this resistance now. Now you have to start getting a bit nervous. All right, unless you just think this market keeps rallying into the end of the year, terrific. Well, that's your call. The market has gone on a stilt from roughly the 4150 area all the way up now to a high that we just got at 4580. I told you I think you can get to the 4700 level on the dailies because you have an inverted head and shoulder. You don't have that pattern here. So here, you're coming into the key resistance, you can see. The pattern is one of a lower low, higher high. This is called a vertical price rise. And it happens when a market hits a low and just each time, notice it doesn't even back off and give you an opportunity to come in. You don't have one of the weeks that made a lower high. Every one of them have gone up since you bottomed out on that week of the 26th. You're over the 18-week average. Where do you think support would be if you fall back right away? My guess is the 44.18 level, about 150 points lower. And the resistance is where I've told you. I believe it's in that 4,700 zone, and here it's 46.45, let's call it, the upper Bollinger Band. Are we overbought? Absolutely. Has the market been on a stilt? Absolutely. When we come to the Dow, it just joined the parade a week ago. I told you about it in my daily videos, and it too has just picked itself up and been running to the upside, but like the other, it's overbought. I'm not convinced on this run you're going to clear that high, so I'd be a bit cautious if I were you. The NASDAQ is the strongest because it's got all the tech stocks that everybody wants, but this week you hit an area of the upper Bollinger Band where I think the smart money's taking money off the table already. Just what I'm thinking there. We then get to the Russell, which is still the one market that can't rally much. Doesn't mean at some point it can't catch up. Frankly, if you took out, not this week, but last week's high of 1838.5, you would open the door up to come up and start challenging the 100-day average in green and the gray 1875. But right now, it's been a bear market rally. Why? When you're under the red line, which is the 18-week moving average of closes, your bias is down. And if you get a buy signal where the swing line turns higher lows, higher highs, often you just rally into the resistance of that and have to make up your mind, or the market makes up its mind, what next? And we're at the what next step. When we come over to the 5-year note, it's been the same thing. I know you don't agree, but it's all it's done. You've been under the 18-week average. You ran the Bollinger Band for the longest time. You embedded. I mentioned to you the Gorilla Glue trade. It worked out when you just kept hitting that band coming down, and now you've rallied back. You're in the neutral zone now. So we're not at a point where Ira's on the phone saying, with you, hey, we're going up there. No, we are at an area where the market's got to make a key decision. The 10-year note is identical. It did the same identical thing, and you've hit your objective. You hit it 2 weeks in a row, actually, of the 18-week average, and now it has to make some decisions. We'll talk about that during the week. In the dollar, we have just broken the back of the bull market. So the bull market that began in July with this low carried all the way up, and right through here, you began rolling over to make the lower highs, lower lows, and now you have settled underneath the combination of the 100-day average and the 18 and the 200. You've got yourself into a problem area in the market as I'm seeing it. You could be getting back to the 101.53 level if the bears come out in force. If that's bearish, then what's bullish is taking you up in the eurocurrency. And if the dollar does drop, then I think you're looking at right up here, the 110.80 area, 110.5 zone, because the Bollinger Band will drop a little bit as we reopen Sunday night. Canadian dollar. I'm pissed that I'm happy. I had a recommendation last week for my clients. The seasonals have been down, but my chart work was really bullish. So I told them to buy, and I didn't want them to carry a position over Thanksgiving. So I just had them take the last part out Wednesday. All right. We were closed for Thanksgiving, and today is Friday. And today the market added about 50 points. So what? That's all I was looking for. Here's the name of the game. Ka-ching, ka-ching, if you can get winners. Do I get losers? I absolutely get losing trades. I absolutely make bad recommendations. The guy that doesn't, go with him. I don't know what his name is. I don't know where he lives, but he's a fraud. Every trader gets and has losses. The key is controlling the loss as best as you can. And the key is to be more consistent with the winners. That's what you try to be. It's not, I'm going to get 10 losers and I'll get one winner that overcomes them. Tried those techniques. They don't work, okay? It's a grind. And that's why it's called trading. Investing is different. You don't need charts. Throw them away. You're an investor. I've read the fundamentals. This is going to happen, and I'm in it for the long haul. You might open a chart to say, well, I can get a better entry point. But at the end of the day, there's a huge difference between investing and trading. Futures are for trading. The stock market is for investing, including ETFs. Why? They don't expire like a futures contract does. Number two, they don't have the leverage of a futures contract. You got 90% leverage typically in futures. Typically, in the most markets you're going to trade, you get 50% leverage. Don't get me wrong. You can get 2 and 3 time ETFs. I know that. You know that. They're not the vehicle to be in. They don't trade with the heavy volume that you want. The whole idea is when you're wrong, you're able to get out in one piece. And you will be wrong. Lower highs, lower lows, but you just lost the bearish embedded reading. So what's going on in the yen is suddenly there's a lot of talk. Is the government and the Bank of Japan going to change their policy? I read a whole report today. I'm not convinced they're at that point. Yes, inflation is climbing as they want, but I think Mr. Ida wants to see it really embed and lock in. And I don't think he's there. I think that they have a lot of wage pressure coming. I think he wants to see how that works out and the impact of the higher wages, if that's what's going to happen, on the inflation story, and then he'll make a decision. So I think we've had our first round of bear covering, short covering, if you will, and you lost that reading. If you re-embed this week, you're probably going back to challenge the current lows. If you stay unembedded, you've already hit your upside target. I don't know what to do with it. In Bitcoin, I think you take a dart now at Bitcoin, you throw it, you say, I'm going to own some of these mini Bitcoins, I'm going to close my eyes, and I'm going to guess when the SEC releases and says we can have our first ETFs, that it will go from a 38,000 level to 45. Forget the charts. That's your bet. I'm not telling you to do it. That's what I think traders are doing right now. Now we get to the crude. And the differential, you can see how you're holding up better on Brent than the U.S. We're producing like mad. Europe is getting a lot of our oil. They need it. We have willing markets, and we are hitting record production in the U.S. without, I want you to listen carefully, without really drilling new wells. The new technologies we have developed, we are bright people. This fracking has turned into really something where we're able to get more out of each well. We're able to push in a different way, get things. We get a lot more natural gas, so you get that as the byproduct, and that drives prices down. Thank you for winter time. Thank you very much when natural gas is going down. Your Brent just hit the area where last week I think the short covering took place. I think traders are on a wait and hold to see what the market's going to do, both in the WTI and the Brent. In the heating oil market, you can see we're down here, we're oversold, winter's coming. Not a market I want to be short much longer. Okay, you're now going to go into the December, January, February period where it's very cold. By the time you're out of February, we're already talking it's going to warm up. I know people don't believe that, but been around this a while. That's how it works. So you put it together, you come up with your game plan, and you try to execute on it. That's the name of the game. Here's your game plan right now. You're watching me on YouTube, move to the top right, give a click, take advantage of this, and enjoy it from me. I'm Ira. You have a great weekend. I'll see you all Monday.